Hey everybody, welcome to July 16th, 2026 Principal Profit Trader Coaching Call. As promised, we are going to go over a couple of Bitcoin to bottom time and price level decodes that worked pretty much every single bear market before this. I'll show you it. The other thing that we're going to look at is the trades today that we took, and we'll get right to it. Okay, so we'll start with the trades that we took today. The first trade was a pullback continuation pattern. Doesn't really look that good on the hourly. Probably should have been more focused on the hourly when I took that trade. But essentially, it was this, we came down in here, traded below the VWAP, went back up into the VWAP, and then came back in. As soon as I saw the tail, I got into it, and that's when I got into it. And I said to myself, I'm not going to have a wide stop above here because I'm willing to take it again at the high of the day at this resistance zone. So I needed to get out quickly once proven wrong. You have to lose well in this game if you want to be more of a smaller day trader. This was a day trade. I can think on multiple time frames. Not many people can pick multiple ways to do it, but that's what I'm doing. So obviously, right, the double bottom at 8:30 held. I actually didn't think that was going to hold. We didn't have a lot of volume, but there's the way that it came down. It just wasn't a very wide double bottom. I thought there would be more of an overshoot. Excuse me for a minute. Thank you. But the problem on the first test is that we were hitting the 50 MA, which it was acting as support once it was broken. But keep in mind that in past times when this is rolled over and we had another leg down, we kind of traded around it as well. So we might start trading around it. The other reason I took a short again at the high of the day, which was planned, is that we had this triple bearish divergence on the MACDs, the RSI, and the CCI covering multiple time frames. And like I said, if the bottom's in, I want to see a lot of volume. And a lot of counter trend rallies have at least some volume, and this really hasn't. Excuse me again. Sorry about that. Keep going. Okay, so the decode that I wanted to talk about. Well, we'll get into that. That's the main nuts and bolts. But why I think this is a pretty good trade is because we had both a confluence of horizontal and directional resistance. So we had, this sort of false breakout. We came back up into initial resistance. That's when the short was initiated. Again, that was also an intraday double top. So we had that confluence of trade location. We also had this trend line here. So, like I said, there was a little bit of a beauty principle in that there's times when we came back up out of this balance, and then when we closed below it, we had to move down. We came up, tried to break out of the balance of the trading range, and then came back below it, tested it again. Now, granted, we did break out above this zone before, and this, if you think about this as a trading range here, right? We're just going up and down in this box here, and these are false breakouts that then tend to, on the retest, go down to the bottom of the balance, and that's what I was betting on. We also have a balance here, guys, of the last 9 days. This is a larger time frame balance of like the last couple of weeks, and this is the last. Let's see here. We drew one around here. Yeah, last couple of weeks, and this is June 5th. This is like a month and a half. So this is a much larger time frame. But the reason why we have mixed signals is because for the last month and a half, we have been going flat, aka we've been going sideways. So there's not directional conviction one way or the other. But keep in mind, we are going sideways in the context of a now confirmed bear market. Let's get rid of some of these tools. Where every rally, no matter the strength of it, will eventually fail. That's the idea of these false rallies or counter trends, because the trend is down. Every trend up is a counter trend, not a breakout for a bottom, but a false breakout for a short. We also have this, bull flag. Remember, a bull flag is descending channel. of parallel lines, while a bear flag is a ascending channel of parallel lines. Keep in mind, the greater the degree of the angle of descent or ascent, the greater the pole can be. And once again, the mature balance concept. The longer in time this thing can form that pattern sideways, relatively speaking, the greater the trend energy out of it. You can see this was a very long, mature balance. And when we finally got the trend out of it, it was quite expensive. We made a lower low, even though many called this to be the final low. And then we started going sideways again. I think this is now a bull flag here. But remember, don't let the name fool you. A bull flag is only a bullish setup in a bull market. Let me repeat that. A bull flag is only a bull setup in a bull market. In a bear market, it is a bearish setup, meaning odds are, because we're in a bear market, this channel is going to break to the downside, not to the upside, despite the fact that it's a descending bull flag from a technical isolated perspective. But in the context of where it is and where it's happening, it's going to be a breakdown pattern, odds say. Now, if we are everything we've been talking about on the daily so far, right? We have this bull flag, we had this divergence here, we have this major horizontal resistance, we have a crossroads of major directional resistance. Let me get rid of this now because it's over with. Granted, we do have this inverse head and shoulders, but like I said, it is now testing the bottom of a much larger balance in time. Here, it's got to prove itself. I'm not saying this thing can't get higher. I don't know what it's going to do. I mean, this is not a good sign. Like I said, closing now, failing to make a higher high. We didn't even really test the outward bounds of it. I thought we'd maybe at least get to 67 before it failed. 70, as this rolls over, would be the max on the 100. But, if it's a more feeble rally, then we have to adjust our opinion. Like I said, this wasn't a crazy topping sign. We didn't have an absurd selling tail, but it was a spinning top. It was, not certainly a bullish sign, but, here we have it. Now, I imagine that we could pull back into the 50. We are getting a little bit lower now, which is great. I do, shorting here. I have taken the complete, I am a day trader, so I'm able to take half off here, move my stop to break even. This is a risk-free trade right now. That's the idea with the quad exit. Yes, I could have kept holding, but I didn't want to take a loss. Maybe we'll come back up and go past my break even, and that would have been a loss, and I've already taken a loss on the day. So there's that. And just the idea that I could just rest, there is a idea that this could be a bigger move down, but I'm basically saying, hey, I'm the guy that figured out the end of the counter trend rally. I can't really predict that. I think there might be good odds to come back and retest this micro bull bear zone. Notice we're making this megaphone pattern here at the crossroads of these two directional trend lines. So I could see us, notice I don't really have anything in between the micro bull bear zone. Remember, micro bull bear zones are technically automatic longs because we had this V pattern, sideways to go. We had the head and shoulders reverse. So there was a lot of reasons to do that. But remember, this is just one giant trading range. And, every time it tries to make a breakout, it seems, and fails in a bear market, it could lead to more downside conviction. So I think this could be a liquidity sweep to the downside. I think bulls can get active again at these lower resistance zones, maybe here and here. I definitely think we can retest 57 and break it. Obviously, things aren't just going to move straight line down. Breaking this on conviction, though, right? When we had, when we're bouncing up here, this is how you can start a reversal of the bias. Clearly, the bias has been up since June 30th. All of July has been up. Is this it? The middle of July here, or are we going to keep going? We don't really know here, but obviously, getting a false breakout pattern out of this time frame, which I've been talking about. Not sure why it's a little bit stuck here, but we had this balance here. We broke out of it. We really wanted to hold above it and build structure to go up and test these bigger, larger bounds. But as you can see, I have a zone from here to here, which encompasses the end of this selling tail, which is a psychological resistance zone, and this key swing high here. Both of this and now this have now formed a parallel. I clone this parallel bull flag. A bull flag in a bear market is still a bearish signal. Okay, so we have this flag pattern, which is bearish in a bear market. We have this false breakout pattern. I said we needed to hold above the 50, but I showed you beauty principle wise, we usually just trade around it. So it was almost like this was almost a temporary support level. So yeah, this is, even though this is a bullish engulfing candlestick pattern, and we took out all this data, getting rejected here in this topping tail and going back into the balance is sort of invalidating that candle as we speak. Now, obviously, we got to go back down to the lows and test it, but that's the idea. We really didn't want that to happen for the bulls. Now every other time we were in this trading channel after we made this wide double bottom, testing the bottom of the trend line here, we had that strong thrust up. Then we had the first pullback. Every time we retested that pullback, notice the momentum was showing a bullish reversal. That was a zero line reject. That is a trend continuation of the uptrend. Notice here, one of the mistakes I made here is not to go long. I did see the double bottom. I did see the 20. I should have said, hey, it had good trade location and we have a zero line reject. That's enough for a scalp. Now, I didn't expect it to do that, but it did do that. You know, you didn't want to be shorting against that for sure. So now up here, that's when the shorts were going to start to get more interesting because we had the false breakout pattern. We had the topping pattern. I thought this was actually going to close a little bit higher and actually go test up here. But we got the other idea where the top of this zone held, and then we had the false breakout pattern. And of course, these divergences are holding. You have the orange over the blue starting to roll over, which could portend or indicate to the future a downtrend. You have the continuation of a divergence in the MACD. And most importantly, what I'm trying to get at with the CCI is that we do not have a zero line reject indicating that this is going to be a short-term down move and a reversal. This time we did here, this time we did here, this time we did not. You know, in fact, we have that bearish divergence. This is almost like a resistance zone that held, and we were making higher highs while the CCI, RSI, and MACD were failing to do so. Now, this middle one, which I can expand, is my average true range. It says that the average range over the last probably 20, 30 days, let's see, 14, I have it on 14 days. Okay, 14 on just a standard one, whatever, is 1944.6. Okay, so when you see moves that are approaching that or beyond it, then that's when you can bring in exhaustion concepts. Notice that, you know, typical in the summer, we are experiencing volume decrease and volatility contraction. I haven't even gotten to the main decode yet. I'm just happy that I haven't given a signal in a while. I shorted all this, and all the way up down, but I did not flip bullish here. Dealing with some stress as well. So this was one of the first days in a couple of weeks here. There's been a signal, so I'm happy for that. We got the double bottom looking like it's going to break. And we're going to get lower. And I think my next target I have artificially lowered into the 59s. So we'll see. It doesn't mean I won't take off some here. We'll see how it reacts. But yeah, this is good. This is what I wanted it to do. Come up here. And now we're getting that strong previous move down where we could really start getting bearish here. Good job. Okay. That's not the meat and potatoes of why you guys are tuning in. Okay. If you want the bottom blueprint here, whatever you want to call it, we'll go to the weekly. Okay. Get rid of this for now. Now, there's a lot of lines here. This looks pretty messy. We'll look at the indicators in a minute as they relate to this, but we're on the 2-week index. Let's just zoom down a little bit and go to the week index. Okay, so this is a little bit what I wanted to see here. Let's just get rid of that and this for a minute. What I wanted to talk about here on the weekly, which I've been talking about, you know, last week's inverse zero line reject and there was not a divergence. There was things like that. But what I haven't talked about is the death and golden crosses, which I was bringing up back in the day. A different kinds of death crosses is what we're looking for. What has recently just happened here is that a slow moving average, the 50, has crossed above a fast moving average, the 20. Now, typically people can use 50 and the 21. I use 50 and the 20. My 20 is yellow and my 50 is blue. Once it crossed, right? And then there's also a micro cross here now that 100 has now crossed above the 50, but I wanted to talk about this 50 over the 20 and how price behaves in previous cycles. We have an index, so we can go back in time during that bear market of the previous ones. Now, here we are back in the last cycle 4 years ago in March. You notice that a couple things, just like the last time, the way that this has happened, right, is that we made a high. There was like a double, triple top, whatever. We made our high. We came down into the support of the previous swing on the bull. Then we came back up and the death cross started to form, and then it started to expand. Same thing here. Created a top, came back into the previous swing high of the previous bull, made it support, came back up, even penetrated both of those. This time we didn't, right? And then what happened after that, right? They expanded and they expanded. We can get rid of this just so we can see it better. There was this expansion that took place. And what happened was a huge move down, and how the 20 moving average kind of held for the entirety, right? Besides this one time where the 50 was tested. So I highly doubt the 50 on the weekly is going to get tested at 83. I think this 20 is going to, we might not even get to that 20 on the weekly, which would take us to about 69, which is my max 70 level for this. But just notice that if you just clip the amount of time here and clip the amount of time here, we're like right here, where we really could have a get away from this thing now. And you see how the 50 kind of rolls over and there's time. We really haven't started to do that yet. Now let's go back into previous cycle here. Similar pattern, right? Made a top. Came back up into the previous swing of the bull market previous. Then we started to go sideways. We try to break out after or around, right, the death cross was what I'm talking about, when the 50 crosses above the 20, the slow crosses above the fast. What happens after that, right? We had a huge move down. Again, so that works there in 18. We can go even back to 15. Right, we had the high in 14, 13. Death cross here, 14, and then going from $564 down to 162. Huge crash. And like once again, this has to separate. So what I mean by separation is the time factor. It's not just the length that it goes down, but from every time around the cross of the death cross, right? We want to be buying in this golden accumulation zone, but what confirms the bull market is the inverse of the death cross of the same two moving averages I was talking about, the 20 and the 50. When now the fast goes above or crosses above the slow, the 50 here, that marks the confirmation of the bull market. I mean, buying here, you're the happiest guy ever. You just sat through a trend. Here, we want to accumulate. We'll get lower prices. We may have to sit through something, but the idea is that you want to buy right before this happens. This is confirming it. So it takes approximately 400 or so days between the golden cross to the death cross. You can count out the days. Not precisely, some were 300 and something, high 300 days, but, same thing here. 300 and something, 70 days, approximately 400. Close to 400. And here we're about half that. Even if we do, let's say we do 370, 375, we're only, I think, at, what did I count, 150 So we are approaching the bandwidth of the accumulation zone very soon. That's what we have to optimistically look forward to. Okay, so that's what we want to be alerted to. The system also predicts a violent down move, although it doesn't feel intuitive yet, that we are really going to go quite a bit lower, probably touching, breaking even this 300, and then testing the, at first for the first counter trend, this trend line, and then for the final one, this trend line. We need indicators to confirm all of it for sure, right? I mean, on the weekly, at least we have this slight upturn. Remember, they usually go sideways in these oversold accumulation zones for a while. I mean, all we have to do is go slightly up on the 2 week and notice that we are confirming a orange over blue downtrend. So it's not it's when you have, depending on the time frame, where you mix signals, that we're dealing with right now. There's absolutely no certainty in this game. And besides the time cycle, right? So if we extrapolate around the 400-day mark, high 300s, and I can keep going back in time. I think I went out, I don't know, 4 cycles ago, down to 2015. And we combined that idea with the Bitcoin time cycle chart, which I'm about to show you. They both have a confluence showing that the ultimate low of that golden cross is going to happen in late fourth quarter to even early January. That's around the 400-day mark of the previous golden cross to death cross distance and time span of time. But even the timing of the cycle chart, which hasn't failed us yet, of the major inflection points, also brings us to December 7th, which is that fourth quarter. So just cool your jets. You know what I mean? This thing could have one violent leg down here, then just start going sideways, and the golden cross happens late fourth quarter, and then we start to see it around this time period, the reversal. So we want to time this right. We're getting close. We've been patient this far. Bitcoin rewards the patient. That's what I'm going to say. Bitcoin rewards the patient. A key marker that will also give us a heads up that we're potentially the bear market is over is this key RSI divergence indicator at this key multi-year trend line, which every time we went up to that trend line, which I've drawn here, right, we've had a major reversal. So on these peaks, right, especially on this peak here, we went up, and now this trend line was acting as resistance around the inflection point that was giving us confidence that we were going to reverse down, because that's major resistance until broken. And if you're approaching major resistance for the first time, you can expect, probability wise, major move. Touch there, reverse, to touch there, reverse, and touch there, reverse. So we can see how that's been important. Just how things for this little counter trend, the CCI, on a slightly smaller time frame, showed an actual bullish divergence. So we're getting some mixed signals between some of the RSIs and CCIs, as you would expect, since they're just on slightly different time frames of lag. So I just wanted to show you this Bitcoin time cycle chart and show you how it's in confluence with the index showing this golden cross. Now this death cross, which portends further down prices. The other death cross that just happened right now is the 100 just crossed above the 50. Now we can go back in time and see if that has had any significance. Like, you're right, the 100 just crossed above the 50 in the last bull run as we were popping back up. And that portended a price decrease of around 22,860 to 1551. So that is significant, right? We're talking close to 50%, right? If we do 50% of 22, that's half of that is around 11. And we got, just north of that. So, 40% flash crash is, and then of course the distribution of it, right, is what we did the last time we had a death cross of the 100 and the 50. Now I'll go back in time and back test a little more. That's the 50 and the 20. That's the one we covered. Then this one crossed. So kind of a failed signal here, right? Because it didn't really, right? But then we got the golden cross again and everything flipped golden again, and then we got the blue up. So yeah, like they're not perfect, right? That's why I really liked the one that I just showed you of the 50 and the 20, because I mean that's worked every single time. The one that I just showed you, it didn't even work last bull run. So, or the two bull runs ago, it worked the last bull run very well. So we want to get things that have a strong history of working in multiple cycles. Like remember when I found that inverse zero line reject setup on the 2 week, which indicated that we were going to have another failed rally a couple months ago? I'm sure you did. Just the weird things a guy who's a trader who lives alone thinks about. So, well, that was the decode, guys. It was the death cross of the 20 and the 50 crossing, which in every single bull run, every single time, has marked a major crash of further down prices and a little bit more out, because the timing from the death cross to the golden cross was around high 300 to around 400 days, and we are, approaching half of that right now. So we're just on like 150. Yeah, and I think that if we do get a rally that'll go higher, it's just going to back test this previous trend line here, right? A trend line that we hit here, here, the body here, we touched here, we touched here, we touched here, we touched here, and then we came back up, and it kind of can act as resistance now. We might not even get that high. Like I said, we got to see how today, it could roll over right now. This could be it. This could be whether we get a feeble rally now or slightly higher from here. It doesn't matter. I still think that every rally in a bear market will be a failed rally, and until the 4-year thesis is proven otherwise, I'm going to bet with something that occurs most of the time. If anyone is telling you the bottom is in, just say, "Oh wow, every single bear market, every time it's been around 80 or 90% decline, and it lasted about a year, and we've only been around 50%, and it's been 6 months." So while yes, we're approaching that level, if anyone tells you the bottom is in, ask them what evidence they have, because they would be betting on an anomaly. They would be betting on the lower odds position, because every single time Bitcoin's gone down 80, 90%, not 50, and it's taken 1 year, not 6 months. That's it. I mean, I obviously can get more advanced than that, like we did with the time cycles, timing it, and looking at all the patterns and how price moves and so on, and indicators to determine whether the rally has any momentum, sustained momentum behind it or not, looking for divergences and signs of exhaustion. But more than that, it's just simply looking at how Bitcoin's behaved on all the other rallies and all the other cycles. And if you believe right now that the low is in, you are betting on a lower, something that's never happened. There's never been a violation of the 4-year thesis. There has been numerous postulations by the same Moon Boy characters that constantly talk about how when Bitcoin was at the all-time highs, and I was warning people that we were in for another 4 years, especially after that candlestick. I have Telegram evidence that I was warning people the day after we got to the all-time highs, because the same cast of characters were calling for an anomalous event then. They wanted it to go to 250,000 when all the evidence suggests that we were done. Evidence that you guys have in your daily call system, like the qualities of the leg count. You're counting how many legs we go up till we get exhausted. You're looking at patterns to see if there's a triple top there. You could even get into various facets of the leg count, like I've expanded to, looking at ABC corrections in the context of a 1, 2, 3, 4, 5 Elliott down leg wave count. You know what I mean? We can get nuance with that category as well, which I have been adding to the game and repertoire. So, yes, we are in a correction. The market has been going flat. We have mixed signals on multiple time frames, daily, very bearish signals, weekly bullish to biweekly bearish. So nothing is aligned. there is room for this to have another bloody leg down, and then maybe, we start to see things go sideways into the fall. But yeah, there is. I think that the next move down is, you know, it could catch people by surprise of how bloody it could be. Initially I was like, I'm going to load all into the 300 because I think we're going to get a counter trend. But given how much we balanced here, it might even be lower than that. I have to watch how we behave there before I launch a counter trend. Because even loading in now and just holding and going on vacation is a little premature. Like I said, I showed you that every single bear market, especially the last two, from the top, if you count the top till when we bottom, the ultimate low of the month, or the week rather. I'm sorry, the month. We had 9 monthly red candle closes every time. This time we're on 7. We've had 7. That means we're due for 2 more. We want to be very specific to that, very simple idea. So all these ways of looking at it, from the candlestick pattern that I just mentioned, to the time cycle factors that we've looked at, to the way that the moving averages behave and roll over and interact with each other with the death and golden crosses, aka beauty principle energy, ways of looking at it, it's hinting there's no signs right now that says this is also a bottom, guys. We need volume, we need vertical volume corroboration, cooperation. I mean, the last cycles of ending the bear had insane sort of blow off bottoms, if you will, with strong vertical volume. And here's the volume's not there yet coming into the market. So I don't see that happening. And like I said, 4-year thesis and timing wise, that's also pointing towards another move down and a bear market into the fourth quarter, where the bull market will resume. And that's the story. That's the position that I'm sticking to. That's the lens that the system is giving me to see through. And I'm grateful for that lens because it hasn't failed us yet. So yeah, this is going to be not something that, like I said, most of these videos are just released to members in the room. If you go on my YouTube site and you see some videos that are released to the public, just know I sometimes, if I do release them to the public, it is months later just to get some advertisement. It's not like somebody's going to cheat and not pay and then just try to get all this information. It won't be relevant to them. But if they want to learn in hindsight and see what we're about, I've lost, I think, 3 or 4 or 5 students in this bear market. Obviously, people just lose focus during a bear market because they usually, what they do is they learned how to buy the dips during the bull market, but they bring that same strategy over to a bear market and they're buying the dip that keeps on dipping. So you don't want to buy the dip that keeps on dipping, because if you buy the dip that keeps on dipping, you're a dip. And you want to buy the final low. We have the skills to do that. The dollar cost average guys are just getting wrecked. They don't even have any capital left over, right? Because they're just buying every single dip. And it makes you wonder, like, why don't they hire PPT guys at Michael Saylor's fund? Because he bought all the breakouts, he bought the dips that kept dipping, everything we warned people not to do. If you're just holding and you're not shorting, you're not doing anything through this whole thing. It's hard to sit on your hands, but that's how you're going to make the most amount of money. If you are getting involved on these swing and day timeframes, well, then you're shorting the rallies when it shows signs of exhaustion. And if you are buying the dip, you understand that it's a counter trend rally and that it will fail. So you're not holding to the all-time highs, you're holding to a reasonable level of support before you take profits on your long, which has been the top of the flagpole, the flags. Right. So this has been an educational week for people. I mean, right. We talked about the difference between a bear flag and a bull flag, how even though we're in a bull flag now, because it's descending, because it's happening in a bear market, it's still a bearish pattern. So remember, the system that we're showing you, the daily call, it's been implemented into everything that we do here. And what I brought to this as well is a holistic, contextual analysis. It is a holistic way of
performing a contextual analysis on the market. Everything is unique, everything is different. So the parts of the system are holistic and interact in a principle-based way. But the ones that become more important and how they kaleidoscope and interact with each other is a constantly amorphous and emerging concept. That's why we got to do this every day to get a gauge on it. But when we do declare there to be a flagpole trend, for example, if we see strong moves, then we will hold for larger targets and set it and forget it. So
Yeah, hopefully that was a good education for everybody. We have a little bit of these decodes with the golden and death crosses. That's the 50 and the 20 that I'm using. You could use the 50 and the 21. 40 might be a little bit too shallow. So, all right, usually this time we will be going to some questions, but no one's in the meeting. No one sent in any questions. There was a request to record this, so of course it will be recorded. And I will process this and upload it as soon as we end here, which we will do now. Take care, everybody. Good night.